Hey everyone, welcome back to the channel. For years, Nvidia has been the undisputed king of AI. Their GPUs power everything from cutting-edge research to the latest AI models. But is that dominance about to be challenged? That's the billion-dollar question we're tackling today. Is Nvidia stock no longer bulletproof? Are the DeepSeek fears justified? Buckle up, because this could impact your investments and the future of AI itself. Before we dive into the big story, let's address the elephant in the room, or rather, the robot asking if you're a robot. The "Are you a robot?" message? Frustrating, right? It's a common web security measure, often related to JavaScript, cookies, or just overly aggressive bot detection. Annoying for users, but honestly, it's a blip on the radar compared to what we're about to discuss. Think of it as a minor accessibility hiccup, a tiny inconvenience. Now, onto the real game changer. Okay, let's get real. Nvidia has enjoyed a near-mythical status. Investors saw it as a sure thing, a guaranteed win in the AI gold rush. But the news that Nvidia shares might not be bulletproof anymore? That's huge. This isn't some minor analyst downgrade. This is a shift in the fundamental narrative. Something is in the air, and it's making investors nervous. Why? Because of DeepSeek? So, who is DeepSeek? And why should Nvidia be worried? DeepSeek is a Chinese AI company making some seriously bold claims. They're suggesting they have AI chips that can outperform Nvidia's at a lower cost. Let me repeat that, outperform and lower cost. That's a double whammy that could seriously disrupt the market. Remember, Nvidia's pricing power is a major contributor to its massive profits. If someone can offer comparable or better performance for less, that changes everything. It's like Tesla suddenly facing a competitor who makes a faster, cheaper, and longer-range electric car. Game over for the incumbent? The immediate impact? A jolt of fear ripped through the market. Investors, who were previously buying every dip in Nvidia stock, are now hesitant. The buy-the-dip mentality is fading. Suddenly, everyone's questioning the sustainability of Nvidia's high valuation. Is it justified? Can they maintain their dominance? The upcoming earnings report on February 26th is now a make-or-break moment. If Nvidia doesn't deliver stellar results, expect a much bigger sell-off. But this isn't just about Nvidia's stock price. The DeepSeek challenge creates ripple effects throughout the entire tech landscape. Think about the semiconductor industry. Increased competition is always good for innovation. This forces everyone to up their game. AI startups? They're suddenly getting a boost in confidence and funding. DeepSeek's success validates the idea that new players can disrupt the market. This is huge for the smaller guys. Now, let's talk about the giants. Amazon, Alphabet, Meta, Microsoft. These companies are Nvidia's biggest customers. They're spending billions on AI infrastructure. But are they locked into Nvidia? The DeepSeek challenge forces them to reassess their options. Can they find alternative chip providers? Should they develop their own chips in-house? Diversifying their supply chain could save them a fortune and reduce their reliance on Nvidia. This isn't just about loyalty, it's about cost and control. The impact extends to data centers. A shift in hardware demand is coming. Companies will be looking for the most cost-effective and performant solutions. Software developers will be incentivized to optimize AI models to run efficiently on a wider range of hardware. This is all about breaking free from the Nvidia ecosystem and embracing a more open and competitive landscape. Think of it as moving from a proprietary operating system to open-source Linux, more flexibility and control. Let's zoom out and consider the broader socio-economic implications. The job market will shift. We'll see increased demand for engineers and researchers specializing in alternative AI chip solutions. Innovation will accelerate as companies compete to develop more efficient and cost-effective AI technologies. And of course, there are geopolitical implications. The rise of Chinese AI companies like DeepSeek intensifies the tech rivalry between the US and China. This impacts trade policies, international relations, and the global balance of power. It's a high-stakes game. It's crucial to address the ethical considerations. Are DeepSeek's claims accurate and truthful? Misleading claims can damage investor confidence and distort the market. We also need to be vigilant about AI bias. Both Nvidia and DeepSeek have a responsibility to ensure their technologies are fair and equitable. AI bias can perpetuate and amplify existing societal inequalities. Responsible AI development is paramount. Let's break down the risks. Technically, we need to verify DeepSeek's performance claims. Business-wise, Nvidia faces increased competition, stock price volatility, and potential market share erosion. Ethically, we need to ensure transparency, fairness, and responsible AI development. This isn't just about technology. It's about building a future where AI benefits everyone. So, what's the takeaway? The DeepSeek challenge is a wake-up call for Nvidia. It signals a shift in the AI landscape. The era of unchallenged dominance is over. Nvidia needs to innovate, adapt, and prove that it can maintain its edge. The upcoming earnings report will be a critical test. But regardless of what happens in the short term, one thing is clear. The AI chip market is about to become a lot more competitive. And that's good news for everyone, except maybe Nvidia, shareholders who thought their investment was bulletproof. This is a battle for AI supremacy, and the outcome is far from certain. What do you think? Let me know in the comments below. And don't forget to like and subscribe for more in-depth analysis of the AI revolution. Thanks for watching. One thing worth noting is that many news outlets covering this story rely on subscription models. That means they need consistent, high-quality content to keep you coming back. But it also creates a risk. If the content isn't valuable enough, subscribers will churn. And constantly acquiring new subscribers is expensive. So, while a subscription model can be lucrative, it's a double-edged sword, demanding constant innovation and compelling content. Just something to keep in mind when you see these headlines. And speaking of revenue, let's not forget about advertising. Many websites, including news sites, rely on ad revenue. But ad blocking is on the rise, and ad rates can fluctuate wildly. Plus, intrusive ads can ruin the user experience. So, a reliance on advertising revenue is a risky strategy. It's like building your house on sand. The foundation can shift at any moment. Companies need to diversify their revenue streams to stay afloat.